Good morning, traders. Welcome back to another webinar, the Everyday Growth Advisors webinar series. I hope you guys are having a great morning and welcome into the live stream. Today's topic is going to be on a very important subject, which is the supply and demand zones and how do you recognize them. I think this one is a pretty important one if you are a technical style trader. And I am going to be continuing on next week with a fundamental style learning process. And then the week after, we will continue with another 2 technical style webinars. So this week, we will conclude this week with the technical styles. And then tomorrow, I'll ask you guys what you want to learn for next week. And, I'll try to simplify those concepts and get it down for you guys so you get a good understanding of where we're heading with this. The growth webinar playlist is actually looking very nice right now. I'm not sure if you guys have been looking at it. It's building into a very, very great playlist for anybody who wants to attend. And if you look at it, you'll see we started with fundamentals, we've gone to charting, how to create a watch list, how to trade breakouts, the type of different trades, how to manage your positions while also concentrating on how not to lose money. And now we're getting into a little bit of technical analysis. So this, little webinar series is growing into something beautiful. If you have a friend who's getting into trading, you could ask that person to easily watch all these videos and get a good overview on how to tackle the stock market. So this is a great thing that I'm building out, especially for people who, can't afford the mentorship course and yada, yada. I think it's a great way for them to learn some free knowledge without scouring the internet. I personally feel very frustrated when I look for things on YouTube because people don't break it down properly, or they, are just summarizing things off Investopedia, not really kind of putting in their 2 cents or putting in the main thing that counts, which is based on the main concept of experience, right? So today's webinar will be based on my experience, my learning curves, what I have made mistakes on, how can you better use these zones so that you can become a more effective trader, okay? So the first things that you need to understand about supply and demand zones are the idea of what supply and demand are, right? Supply is the selling. This would be the selling portion, okay? When traders are selling shares, they supply shares to the market, right? This is a bearish slant, okay? Bearish slant. And into the markets, this means that traders are actively pushing shares out and they want to lighten their positions. Okay, they want to lighten their portfolio. They want to also take on existing short positions, so shorts. Okay, now important thing about shorts here. What are shorts? When people say I'm going to short the market, right? What does that actually mean? Well, a short is actually you buying borrowing shares to sell them. Okay, if I were to short the market here, what I'm actually doing is I'm borrowing a bunch of shares from another trader in the market, and when the price of those shares drop, I buy them back at a lower price. The difference between these 2 prices is what I get to keep in profit. That is what we call a supply and then a buying back of that supply, okay? So there are many different ways that you can think about shorting, all right? Now, demand, on the other hand, is exactly what it sounds like, right? It's the idea that traders are buying, right? Buying shares, okay? And also, this is a bullish slant, okay? Bullish slant. And when you're buying shares, there's no borrowing. You're just buying from the open market, okay? Buying shares. Buying shares from the open market, all right? There's no rocket science about this. Now, when demand is overwhelmed, when demand is overwhelming supply, prices, which are your prices of the stock, go up, all right? And when supply is overwhelming demand, then prices come down. All right. So over here, well, let's just use this as an example, right? Around this period over here, the demand for shares are more than supply. Therefore, there are sellers that enter the market at bouts, but then the overall demand of those shares are higher, causing the share price to quickly increase. Somewhere around here is where traders start to fight it out, right? And over here is where supply goes more than demand, causing the prices to rapidly deflate. All right. Now, the thing about demand building up slowly is, remember that the market breathes in and breathes out, right? There is a wave pattern, right? We have to breathe out, breathe in, breathe out, breathe in, breathe out, right? And so for every breathe out, the general idea is it's more difficult for price action to go up than it is to come down. Okay? And the reason for this is because the bulls, or the people that push the prices up, which cause a strike for demand, usually have to fight bears on the way up. So you can see it's like a staircase movement, right? But, however, and the thing is over here is greed, which is the emotion that controls higher demand. Greed is the emotion here, right, at play. Because as prices go up, what do people get? They got more greedy, more greedy, more greedy, right? Greed is a lesser powerful emotion than, so greed is less than fear. Okay, now I'm throwing a little bit of psychology in the mix here to kind of really, kind of break this down to the fundamental core here. You need to understand what supply and demand is first before you even look at the zones, right? What the heck is it, first of all? Psychologically, you got to understand that, okay? Now, fear is a very powerful emotion, right? Let's say you were standing, I don't know, you're standing on a cliff. And that's me standing on a cliff. And I'm smiling really wide. My smile is like off the charts here. And your friend comes along and he threatens to push you down this steep cliff that's, I don't know, thousands of meters, 1,000 meters, okay? And you know that if you fall down, you're going to die, right? Well, the thing is, you are going to be super fearful, right? And if you're, of course, you don't have a parachute and, your friend's trying to play a prank on you, right? You won't. The thing is that fear is a very powerful emotion. And so, when you're threatened by a situation where there is something to drop from, there are all kinds of alarms and cognitive biases that appear in your head, okay? You're not really thinking about anything else except for your fear. You're actually paralyzed when fear occurs, okay? The paralysis causes you to make false decisions or bad decisions, okay? Now, when that happens, for example, market irrationally sells off, right? The reason why it sells off so quickly is because fear is a more stronger emotion than greed, okay? And when fear gets introduced into the market, people are able to quickly get rid of their positions without much thought, because people want to take profits, okay? Take profits, and people want to protect profits. Okay? These two things cause a cascading effect that sellers pile in, all right? Not only do sellers pile in, but people borrow to sell. People borrow to sell. And that's what causes a rapid deflation of prices to go up. Now, on the upside, people don't borrow to buy usually. It's, some people do. It's called leverage, right? That's called leverage. Okay? When you borrow to buy, that's called leverage. But the majority of people, the natural effect of shorting the market already has a borrowing effect, because you have to borrow shares from somebody else to sell it, okay? So now that you understand what supply and demand is, you can actually understand how these price actions are generally, working in the markets, okay? So, great. Good morning, guys. Welcome in. Make sure you smash the like button, subscribe if you haven't. If you're here for the first time, welcome in. Hope you guys are having a great morning. Topic suggestion, trading psychology. This section in the course was like constant slaps in the face. Yeah, I definitely agree there, Tanya. But that's like really, I want to say proprietary EGA material there. I could do bits and pieces of it. Maybe I could cover a couple of different pieces next week, and yeah, I'd be open. I would be open to it. Maybe I'll cover different perspectives, different kinds of subjects. There are some cognitive biases that I may want to cover, so I may choose to do those instead. But yeah, it definitely helps me out if you guys hit the like button here, so that I can track how many people are on the stream and listening, and I really appreciate that very much. Okay, awesome. Let me just make sure this is on full performance here. I am not. That's the reason why. Okay, so let's get this started now. Now you understand what supply and demand is. Prices go up when demand's higher. Prices come down when supply is higher, right? And we're using an example of QQQ here, okay? Now, if you watched the previous webinar on dual zones, I think I've done maybe one on one of these here. We'll have the explanation of dual zones. But dual zones are a concept where supply and demand meet at the same spot, okay? For example, this point right here that you can see has both a green and a red line, right? The dotted, the red dots and the green dots. Since I have an indicator here that shows me both supply and demand, which is the support and the resistance, okay? This helps me to show you where exactly traders are thinking that the points are going to be either a buying zone or a selling zone, okay, or a selling point or a buying point. And that's a very important concept, okay. You need to know how the traders are kind of interacting among that point to understand what's happening there. So at a point like this, for example, we are looking at QQQ here, okay. This is just a random example, and we're looking at a 1 hour chart. That's the most efficient time frame to plot medium term trends, right? We could do this on any time frame, but I like to use a 1 hour to plot my medium term, and then go into the 15 or 10 minute or 5 minute to do my fine tuning of my entries and exits. And I'll show you here what I mean, okay? So let's say we look at this point here. This was a resistance here, right? A resistance, and then what happened? Also resistance here, and then QQQ broke out, right? And then it came down and validated this point as a support, right? Which is what I always talk about. You need this validation in order for you to realize that, okay, now this was a previous resistance. Now it's become a support. This is the point at which there was more supply than demand at some point, right? And now over here, the demand outstrips supply. So the power of the bulls overcome the power of the bears, right? And this is what we call, that illusion of control has evaporated. And then the bears push the prices down, but guess what? The bulls contend this level. They contend this level, right? So what that does is it creates a support zone here now instead of a resistance. And this becomes a dual zone. We call this a dual, this is an EGA coined term. It's a dual zone. It's a zone that was previously a resistance that has now become a support. Okay, a dual zone, 2 zones, right? 2 zones. Okay, simple. Now, when you're looking at this point down the road in the future, what you can see is that this zone now becomes a key zone for contest, right? So if we draw this little thing here, and how do you know where that zone is? Well, you have to take it from the top of the candles where that point is, like for example right here, right? This is the top of the candles, right? And to the down of the zone, right? So this is your box, kind of, right? So what we're going to do is we're going to go ahead and we're going to draw our zone here, and we'll see where that zone actually extends to. So we'll do this, and we'll drag it out to the side right here, right? Okay. So now this becomes your dual zone. Now, if you realize, this is a very, very important zone over here. Right? This zone is either used as a resistance, right? And this entire point here is where the majority of the selling happens, right? So now this support that was running and running and running became another support here, and then above it there was a resistance up here, right? And above here, you'll see that this is another zone over here, right? Because you can't realistically say that support and resistance are one point. It's not one point. There is a whole bunch of sellers here. There are a whole bunch of buyers here, right? It's not just one point. It's not like they're all buying at one price, right? So you have to know where the zone is, because the zone determines where the price action will be contended. All right. So this is just an example. Okay. Now we can use another ticker for an example, right? Let's say we go to Tesla. Okay. So look at this over here, another dual zone, right? You can see that, another dual zone. So let's go here now. And here, the zone is actually going to be a little different, okay? It's going to be a little different. This is actually going to be the zone here, right? The zone's going to be a little different here. The zone is going to be the point at which the wicks touch. Basically, you find the longest wick, right? The longest wick, that's the price that the candlestick stretched out the furthest, right? It stretched out the furthest and then receded backward, right? So this is the point where shares were bought up. Okay, so this is a one part of the zone. And then you drag that zone to the body of the candle and you'll get a pretty accurate demand zone. Okay, so this is a zone where the candlesticks came down, there was demand here, and it went back up, right? Candlesticks came down, you see this? Another demand zone here, went back up, right? And then candlesticks came down, it broke, it gapped down. This was a gap here, there was a gap over here. So price action pushed down, and then it found another little zone here, right? This is not really considered a very strong zone. And then we got bought up again, right? And now we're coming down into this zone again, right? Coming down to the zone again. And Tesla got sold off again. It gapped down again, right? Gapped down again. So these zones show you where the likelihood of a price reversal may occur, okay? Likelihood. Not a confirmed thing, but the likelihood. Like for example, up here, there's a zone here. Can you see that? Right here, you can see that, right? This is a supply zone. Right? Here, right? Here, there are a whole bunch of supply zones here, okay? And here, this was your demand zone, and now over here, it's acting as a supply zone. You see that? So these are pivot points at which you have to recognize where a certain price action may pivot. Okay, this is just a quick example of how you can do it. All right. Let's see here. Good morning, T. Can you please explain it with a clear chart? Oh yeah, I got you. My bad. So let me take this off. We'll leave the support and resistance there because we'll need those. We'll take this off. Okay, there we go. Here, much easier. Okay, now let's go into another one. Maybe do Amazon or something like that. I don't know. We can see another one here. So, well, actually, it's better if they're like long wicks, so I can really show. Okay, so here's another one here, right? This is a pretty clear one with beyond here, right? Look at this over here. You can see a clear demand zone on the bottom here. Okay, look at how far stretched out this wicks are, right? There's one here, there's another one here, another one here. Every time it dips below here, it touches this, it goes back up. Touches below this, goes back up. Every time it comes up to this zone, it gets sold off, right? Look, sold off, right? And so this becomes your supply zone, and this becomes your demand zone, right? So you can see a clear little pattern here. I want to show you how to do it on one, maybe a different ticker or something else. Roku maybe, they haven't done it in Roku. Let's see. Yeah, so up here, okay, so this would be another one up here. You can see, so this point here, you can see a clear demand zone here, right? This is your demand zone. And I'm going to make that green. And how do I know this is your demand zone? So you can see the candlesticks, how far it stretched out here, receded back. How far it stretched out here, receded back, right? How far it stretched out and receded back. So these zones, this is the area where demand came in. Supply pushed it down, but demand came in strong over here, right? You can see all of these points over here, and you can stretch it out further, right? So now you know if Roku comes down here, there's a high chance that we can bounce on this level, okay? Now on the top over here, you can see over here, there was a demand zone here, a possible demand zone here, right? So we can do this, bring this one up here. And what you're going to do is bring it to the body of the candles, right? Okay, you can see a little bit further down here, that's your zone. Drag this out. This was your supply zone at one point of time, right? And now this may actually turn into a demand zone, right? So what we can do here is this was a supply zone, and then it stops here, and then we can draw another one. Okay, another one. And what we'll do here is now we'll push this here, but instead of now it being a supply zone, we'll make it a demand zone. So there's a chance now that this becomes a buying zone here. So this is both a supply and demand zone here. You see that? This was a price where price reversed. Now it comes down. This may be used as a support. So this would be the key levels to watch Roku at, right? 165 to 170. Okay? This would be the key levels to watch it. Like if it comes down, it can bounce here and then come back up again. Okay? That's the idea here. You just need to understand how to look for the wicks. It's you can see them. It makes it really obvious when you look at how far they stretch out and stuff like that. Realistically speaking, this one could be a little thinner if you wanted. It could be like this, but then I'm trying to cover this wick as well on this side here. So you just kind of pan it to where you think it would be the right spot over there. That's accurately how you would draw these things. Okay. So we'll move this a bit to this side, and there you go. So this is your both supply and demand. So now you have the idea of where it's gonna start to come down from. Okay. Can do Roku. I just did. T, I know you're using 1 hour time frame, but on the bottom, do you have the time monthly? I have it on. I mean, I could do it monthly. Monthly is going to be 30 minutes. If you go, I think 3 months, then it becomes 1 hour. So yeah, this is a 1 hour and 3 months. That's the time frame. Now, okay, so now if you go into a smaller time frame, like a 5-minute time frame, right? Now you can even fine tune this even further, right? That's the idea. You can fine tune it even further, okay? But let's try it on something that we haven't plotted it yet. So we'll choose another ticker here. Let's do, I don't know, Apple. Do we have one? Oh, we already have one on Apple. I already plotted it for Apple here. You can see a bunch of zones here, right? So now this is going to turn into a supply zone here. This was previously previously a demand zone. Now it's going to turn into and this was a demand zone here too. And now this is going to turn into a supply zone. So what's going to happen here? What we're going to do is now we're going to turn this into a red box. Right? We're going to turn this into a red box. Why? Because now this is starting to act like a selling zone instead of a buying zone. Okay. There we go. So now you have that. Now, if this becomes a selling zone instead of buying zone, what's going to happen when Apple comes up? This is going to be used as a resistance point. Resistance point. Okay. So you have to be aware of it. Thanks a million. No problem. Yeah, absolutely. Okay, so the idea, and I don't want to try and confuse you guys too much, but the idea is, you find the outlying pattern here, right? And let's say you found it on the top here. You can see how big this zone is over here. Realistically speaking, this would be your supply zone, right? Up here. Because that's from the top of the wick all the way down to these bodies here. This is exactly where there was a specific price point touching here, right? You can even lower this down. Remember, this is all subjective. Okay, it's subjective. Now, there is another important thing about this. You know that supply and demand acts this way, the price level by the date, right? It works this way, like vertically, right? It works vertically. You can see that the price action works vertically and horizontally, right? But you can also use something called a session volume, which is another indicator. Okay. And if you turn that on, what you get is the days, the day volume going per price action. And for every single price action here, you can see there is a red line that shows you the LOC, which is the line of control. Okay. And the LOC shows you at which price point there's bound to be a lot of volume being traded upon. Okay, so for example, 110.50 there was the price that a lot of price was the price point at which a lot of price action was happening. Okay, a lot of buying and selling was occurring at this price. You can see the red line, right? It's this line right here. Okay, and see the previous day it was 111.25, something like that, right? And the previous day it was at 107-ish, right? So there are, every day there will be another line of control. That line changes daily because traders are trading at different prices, and there is simply where the most price action is occurring. Okay, so if you match this up sometimes, it actually shows you a bigger picture of what supply and demand is doing. Okay, now it doesn't help with the plotting of supply and demand zones most of the time, but it helps you to see where that volume is actually accumulating at which price action. So when you see this line, you see, oh, okay, it's approaching that price action. There might be a higher chance that when it approaches that price level, you may see more of a sideways movement. You can see what happened here, sideways movement. You can see what happened here. There was a bit of a fight. This was also a common point here. And then here also, there was a lot of price action here that was going sideways, right? So this would be kind of like a resistance point and can turn also into a support line, okay? This is another thing that you got to think about as well, all right? Great. So this is just a small example of another way you can look at supply and demand here. It's called session volume. So if you want to search for it, it's under here. You can search session volume. This one. Session volume. That's it. Okay. Let's see. Who's it by? I don't even know. I don't think it has a name. So yeah, that's just the name. It's session volume, in case you guys were curious on what this was. Does this help you guys out a little? What indicator do you use to get the red and green lines on your chart? The red and green lines. The red and green lines. Did you mean the red and green lines? What do you mean? Oh, this one. That's a support and resistance. That's pattern smart. This one right here. Pattern smart. You can just type PATTERN smart, and you'll get that indicator. It's by this one, the one with the most uses, 20,329. Swing high and low support and resistance. That's the one. What indicator is that for daily volume? It's so that's what I just said. It's called session volume. Okay, check it out. Yeah, absolutely, no problem, guys. Also, people who are here who are attending this webinar a little late, we were just kind of talking about breaking down supply and demand, what they are from a fundamental perspective, and then talking about how it relates to trading. How do you get these zones? Majority of the time, it's a little tricky sometimes, but a little bit of practice will go a long way to understanding those. It's mostly the idea of understanding where the most common dual zones are. It's not really about seeing where the resistance and support is. It's about finding the dual zones. That's really important in my opinion. Okay, it's super important to know the dual zones, because the dual zones give you a good idea of where the price action is most likely to have that kind of an effect. Okay, and these overlap sometimes, so you got to realize that. So let's go look at another one, a random ticker here, maybe Facebook, I don't know. Okay, so yeah, so I have drawn this one on Facebook. This is a demand zone down here, right? We're actually what we're gonna do is we're gonna try and redraw this, because now we have a new demand zone, right? So we're gonna try and make a more smaller demand zone here, and we have the price action from this side here. So we'll try to make a custom one here. So this will be your current. You look at this here. This is your dual zone, right? This was a resistance point, and now here. So this point here, this entire zone here, is actually going to be pretty much a demand zone here, right? This is where price action is recorrecting up here. You could go a little higher. This is actually realistically where it would be, right? Since that's where the candlestick was mostly. But the thing is, remember, this is subjective, right? It's subjective. It's the way you think it is. So it could be down here. It could be down here as well. I like to cover the whole area because that's where it makes more sense. But you can also cover it up to here if you really want to be like defined and stuff like that. So I like to make this green. that's going to be your demand zone now. So Facebook is within the demand zone. No, it's going to open up below it right now, right? It's going to open it below. So we'll see if it actually buys back up here. Okay, that's the important thing here. And then on top here, you can see, so here you have another kind of a dual zone here on the top here. You can see that, right? You have this point here, right? So this is actually going to be your supply zone up here, right here. You see that? It's not really that hard once you think about it. You just gotta look for the dual zones, because the dual zones will tell you the story, right? The dual zone is where you had both price action happening, right? You have both buying and selling, right? This was your a resistance point up here. This was a support point. This was a resistance point up here. This was resistance here, and at some point of time, this turned into support as well. So this is more of a resistance zone and a support. So this becomes a supply zone. So, and you can see price action mostly reversed here, right? Mostly reversed. You can go out and drag this out all the way here if you want, but I don't like doing that. I like to keep it defined a little bit. So here, or even up to here, is still okay. Right here on a 5-minute chart. So these will be the two zones that Facebook will trade between, right? And then if it breaks above or below one zone and confirms, so for example, Facebook opens up here today. If Facebook buys up and then closes above this zone tomorrow, then there's chance of upside, right? But if Facebook breaks below and stays below it, uses this as a rejection, and more supply comes in over here, then you know that the price action is heading further down, right? Okay? Same concepts. Same concepts. It's basically where the control is for both supply and demand. Okay? What do the green and yellow bars indicate on the session volume? The green and the yellow? You mean the blue and the yellow? The blue and the yellow, you mean? That's the number of buyers and sellers. See? Volume up and volume down. Sorry, the value up and the value down. So, down volume is yellow and up volume is blue. So, it's showing you both the volume and the amount of, so it's showing the volume of the shares traded at that point, right? The supply and demand for both buyers and sellers. So the amount of buying is going to be the blue. The amount of selling, or rather the volume going up is going to be blue, and the volume going down is going to be yellow. That's the idea. And the POC, the point of control, this is the red line. That's you see how the POC perfectly lines up over here? It's actually at your resistance point right here. So that was interesting, right? Today there'll be another POC. Tesla. Somebody's saying do Tesla. Let's have a look. Let's do Tesla. So we actually did Tesla already. Oops. We did Tesla. So this was your demand, your supply zone up here, your demand zone down there. We actually already did it right here. Remember, the session volume is to be used on a 5-minute chart. Okay, guys? It's meant to be used on, if you use it on a 1-hour chart, it's not going to turn out right. Look. It's not going to turn out right. It'll look really small and weird. Look. Like, if you go into 5-minute chart, then you'll see what I mean. See? Then you can see it. In a 1-minute chart, you can see it too, I believe. Yeah, you can see it more clearly in 1-minute chart. 5-minute works perfectly, in my opinion. Even 2 minutes works good. Like this. Basically, 5-minute and below. Don't use above that. 10 minutes, also okay, but smaller. So 5 and below, that's what you want to use for a session volume. Alright. Oops, blue and yellow. Yeah, that's it. So I explained that. All right. Well, I hope this webinar helped you guys out. Sweet and short. I don't want to, drone on too much. I gave you a couple of examples, showed you how to do it. Now you can, take the time to learn this, practice it, become good at it. And yeah, I really appreciate if you could honestly take a second out of your day and hit the like button, the thumbs up, if you can, so that the stream can be shared with other people. By the way, thank you guys yesterday for, getting us to one of the highest likes we've ever gotten on this YouTube channel. I really appreciate your effort being here and taking the time out to attend these webinars. They're super, super important. Majority of them, I'm just, kind of teaching you guys core concepts that you need to know as traders. So I hope that you enjoyed it. And if you did, just, leave a like. That's what helps me out a lot. You don't need to donate if you don't want to, but if you want to, there's also a method to donate here. You can click on here and send a super sticker or a super chat out if you wanted to, but you don't need to do that. All you need to help me out with is a like. That's all, because then this stream gets shared with other people, and that's exactly what I want to do. I want to spread knowledge as far and wide as possible for free, because you guys deserve it and you guys work hard, and I appreciate you. So yeah, that's all. In terms of the market today, it looks really terrible. I think we're gonna go further down. Said it yesterday, and gonna continue on with my thesis here that we're gonna see lower lows here. We got rejected at the this main point that I was talking about, previous live stream and the ones before. That's the reason why I didn't buy this fake out here. I said wait till we close above and bounce over here, confirm, then we play the upside. Don't try to chase this. And indeed we closed below, and now we're going to see some fresh downside. I say NASDAQ coming down to the 150 moving average is a real thing right now. A bloody market's coming up. It's possible. Actually, let me just drop the fib here and see what we are actually looking at here. So looking at this here, we'd see from this point, and we're going to drop the fib to the previous lows here. So we have I'm going to say that would be one fib, and then the other fib would have to do another one. So we'd have to do from this swing high, and we want to go down to this swing low here. Even possibly this swing low, actually. Yeah, let's see. Let's see what happens. I think, we're definitely going to see some further downside. If we get some good news, then, we may reverse course here. But let's see. I don't know if we can, hold this line over here. It looks terrible. It looks really terrible. I'm going to go ahead and delete these fibs because they look really horrible here. But yeah, I'm going to draw it on the other TradingView chart so that I can look at it better. But yeah, guys, be careful. Be careful out there. Be safe and have a good day. I'll see you guys for Recap Friday tomorrow. We'll choose a new ticker for the week. Recap on Disney as well. And yeah. Let me know what you guys think about the webinars. Really important for me. So come back tomorrow. Let me know, and I'll see you guys tomorrow for the webinar. Have a good day, guys. Be safe. I say don't trade today. In my opinion, don't trade. Sit out. It's okay to not trade. Listen to some jazz music. Relax. Have some whiskey in the morning. Start your day right, and take a chill pill. All right. Have a good one, guys, and peace out. See ya.